The Unrelated Business Income Tax or UBIT and the not-for-profit realm. This combination of UBIT and restrictive expenditure regulations fosters an operational model where not-for-profits can generate income sustainably while remaining focused on their primary mission. The Unrelated Business Income Tax, or UBIT, applies to not-for-profit organizations that generate income from commercial activities unrelated to their primary charitable or educational missions. Established by the United States government in the Internal Revenue Code, UBIT aims to prevent not-for-profits from using tax-exempt status as a competitive advantage in the commercial sector. Specifically, UBIT applies to income from trade or business activities that are regularly carried out and are not substantially related to the not-for-profit's mission, even if such activities generate revenue that ultimately supports its charitable or educational goals. This ensures that any income generated from these unrelated business activities is taxed similarly to that of for-profit entities, preserving fairness within the competitive marketplace. A not-for-profit that owns and operates full commercial operations as for-profit ventures is still subject to UBIT on the commercial gains derived from these ventures. For example, if a not-for-profit organization owns a business in a sector not directly tied to its charitable objectives, it must pay taxes on the income from that business at the same corporate tax rate as a standard for-profit enterprise. This tax treatment upholds the principle that commercial enterprises, regardless of ownership, must contribute fairly to the economy and public services through taxation. Such taxation also prevents not-for-profits from potentially undercutting private businesses solely based on their tax-exempt status, maintaining equilibrium and fairness in the competitive landscape. Through the inclusion of UBIT in their financial structures, not-for-profits have the opportunity to diversify their income streams by engaging in unrelated business activities without losing their tax-exempt status on donations and mission-related revenues. This diversification provides not-for-profits with an avenue to achieve greater economic sustainability while maintaining compliance with federal tax obligations. By generating business income and paying taxes in accordance with GAAP or generally accepted accounting practices, and through UBIT, these not-for-profit organizations can simultaneously fulfill public responsibilities via tax contributions and continue their philanthropic or educational work. When structured effectively, unrelated business operations managed by not-for-profits under the UBIT framework can strengthen the organization and its overall financial and economic stability. This stability benefits the broader community by ensuring that these not-for-profits are less dependent on fluctuating donation streams or government grants, allowing for sustained operation and expansion of their core mission-driven activities. Consequently, while UBIT places an additional tax responsibility on unrelated business income, it also facilitates a balanced approach, allowing not-for-profits to become economically resilient and contribute to the fiscal landscape in a way that supports both their goals and those of the public sector. This tax ensures that not-for-profit entities, while benefiting from tax-exempt status for their core activities, still contribute to the tax system on income generated through unrelated commercial enterprises. In this way, UBIT helps to create an economic balance by preventing these organizations from having an unfair competitive advantage over for-profit businesses in similar sectors. Consequently, not-for-profit ownership of for-profit ventures presents a dual opportunity in that it offers a way for not-for-profits to achieve greater economic sustainability while at the same time ensuring that they fulfill their legal and social tax responsibilities. While UBIT enables financial growth opportunities for not-for-profits, careful oversight of expenditures remains essential. Income generated from unrelated commercial activities can and does lead to improved stability for these organizations, allowing them to allocate revenue toward their mission-driven goals. However, focusing on efficient expenditure management, particularly concerning administrative and overhead costs, is equally important to prevent the diversion of funds away from their stated charitable objectives. Excessive spending on administration or other unrelated expenses can weaken the effectiveness of not-for-profits, reducing the funds available for direct service provision. Effective resource allocation and cost management within a UBIT framework ensures that funds are used in a manner consistent with their intended purpose and that the organization remains accountable to its beneficiaries and stakeholders. Internationally, not-for-profit commercial ventures are subject to various regulatory frameworks. These regulations aim to maintain the balance between tax obligations and the preservation of charitable intent. In the Philippines, for instance, regulations governing not-for-profits and their commercial operations establish a distinctive structure for compliance and expenditure requirements. Unlike the UBIT system in the United States, Philippine law mandates that a minimum of 70% of all proceeds generated through commercial activities be directed explicitly toward the organization and its stated goals and objectives. This regulation limits the allocation of funds for purposes that could detract from the direct benefit to those served by the not-for-profit and their programs. Strict legal provisions further prevent organizations from diverting significant portions of their funds to fundraising or employee compensation, ensuring that resources are dedicated to concrete, measurable assistance for beneficiaries. This combination of UBIT and restrictive expenditure regulations fosters an operational model where not-for-profits can generate income sustainably while remaining focused on their primary mission. As not-for-profits increase their capacity to engage in commercial ventures, adherence to these financial and operational guidelines becomes crucial for maintaining transparency, integrity, and alignment with the organization and its original goals. When implemented effectively, this type of organizational structure will support the long-term economic viability of not-for-profits without compromising the essential charitable functions they serve, ultimately contributing to a sustainable model for mission-focused development and assistance. Fair trade laws and associated regulations in the Philippines are also instrumental in creating a regulatory environment that emphasizes equitable practices in both domestic and international commercial activities. These laws, alongside relevant policies for not-for-profit ventures, are designed to prevent any single entity from securing an unfair competitive advantage, particularly by ensuring that organizations engaged in trade or commerce prioritize the welfare of vulnerable and indigent populations or whatever charitable function may be the reason for the existence of the not-for-profit operations. By legally mandating transparent and accountable business practices, these laws help to mitigate the potential for large corporations, including multinational not-for-profit organizations, to exploit commercial operations for financial gain at the expense of the communities they claim to support. The decision to headquarter international operations in the Philippines underlines a commitment not only to robust legal compliance but also to a model of social enterprise that aligns with the ethical mandates of fair trade principles for and on behalf of the most vulnerable members of society not only in the Philippines but around the world. Philippine regulations governing commercial activities undertaken by not-for-profits mandate a high level of transparency, especially in the allocation of funds. These policies ensure that revenues generated by commercial ventures are directed primarily toward charitable objectives, rather than being absorbed into excessive administrative costs or inflated executive compensations. By centralizing operations within the Philippines, the Foundation can better adhere, if nothing else, at least through legal mandate, to these exacting standards, reinforcing its accountability to both Philippine authorities and the domestic and international communities it serves. This regulatory environment is particularly conducive to sustaining socially responsible commercial practices. Philippine laws require not-for-profits to allocate a substantial portion of commercial revenues directly to programs that benefit society's most vulnerable members. These policies prevent the dilution of charitable objectives through unnecessary spending on perks, salaries, or other benefits that fail to contribute to the organization's stated mission. By maintaining operational international headquarters in the Philippines, the not-for-profit demonstrates a real and legal commitment to prioritizing the needs of the most disadvantaged and ensuring that the financial benefits derived from commercial operations are channeled into initiatives with a real impact on community welfare. Moreover, situating the international headquarters within this jurisdiction aligns with the fair trade ethos of using commercial activities as a vehicle for positive societal change. Philippine regulations favor practices that emphasize support for the marginalized, thus safeguarding against the potential for multinational not-for-profit organizations to exploit their tax-exempt status or concentrate resources in ways that could divert from their core mission. Consequently, operating from the Philippines offers not only a means of achieving compliance with fair trade and other ethical trade laws, but also a framework that inherently supports the objective of maximizing social benefit over corporate profit. Through this model, commercial gains are systematically directed toward sustainable, community-focused development, effectively advancing the organization and its commitment to societal progress and equality of opportunity.
Please like, share, subscribe, and comment below.